All right, traders, I'm going to be sharing with you my trading plans heading into this week. We are going to be going over day trading, scalping opportunities. I'm also going to be going over swing trading and midterm to leap option opportunities as well for some passive income plays. This video is jam-packed with the best setups at the best prices only. We're going to be going over key resistance and key breakdowns heading into this week for put options. As of now, on my micro radar heading into tomorrow, I'm going to be put option focused, and I'm going to show you and teach you how to trade the best setups at the best prices, right? So this is step one. This is the preparation process. This is where you prepare and you create your trading plan and you set your price alerts. Step two is you wait for those price alerts to trigger that came from your trading plan. And then once those price alerts trigger, you wait for the reaction, you wait for the confirmation. If it reacts the way you want it to, if you get that confirmation, in this case, we're looking for bearish confirmations because we're buying put options, betting on stocks in the market to go down, right? Then you seize the moment, you execute the trade, you trade your plan, and then once you exit, you learn from the mistakes that were made, whether it was a win or loss. You're going to get the most value out of your losses, and then you document the trade in your journal, right? So it's a three-step process, right? So let's get into step one, which is going to be trading the best setups at the best prices. If you haven't already, I'm going to leave a link down below in the description. It's going to be the second link. Go back and watch the previous video that I posted. It is going to share with you the best trading strategy that I'm using into 2022 that's working best for us. So let's get right into it. So we are going to be going over Facebook, Visa, Coca-Cola, JD, Walmart, Tesla, Apple, Snapchat, MRK, UAL, Bili, Zyme, and of course, SPY. At the end of this video, we're going to be doing a market analysis on the SPY. We're going to start this video off with, trading the trading plans. I'm going to show you how I plan to trade the best setups at the best prices. As you can see, I have a lot of setups. Not all of them are going to be day trading opportunities. There's going to be some short-term swing trading opportunities and also some midterm to leap option trades, right? So let's get right into it. So Facebook is one of my favorite setups. Why? Because it had two massive gap ups in a row. It is trading towards key resistance levels. Very similar setup, not as good, but very similar setup to Visa. If you go back and watch my previous video, it'll teach you that gap close reversal strategy to fill the gap below, right? So you can see Facebook has key support here with big downside potential once it cracks that key support level. You can also see there was a gap to fill right here. It's partially filling the gap, trying to have a reversal to come back down to fill this gap below, right? So the point being is Facebook cracked this massive support level. And when it cracked this massive support level towards 212, 213, you can also say right here towards 208, right? When it cracked that and turned it into resistance and started breaking down, it had a massive sell-off, quickly dropping to $170 in just 1 week, right? In terms of really micro price action, once it cracked this key level right here, we're going to call it $199 to $200.50. It had a massive sell-off at 186. So this is how you can determine when a stock is going to have a big move, by trading the daily chart. And you also want to trade the intraday chart, the extended hours chart. But in terms of overall macro price action, you can visually see that Facebook can have a big downside move because it had an overreaction. It had a massive gap up due to earnings. It went from 175 all the way to $212.50 in 2 single trading days, having 2 gap ups in a row, right? And if you look at Visa, it did a very similar move, having 2 gap ups in a row. And you could see right here, Visa, just check this out, 2 gap ups in a row, 1 gap up, 2 gap ups. On the second gap up, it went red, and then it sold off very, very hard. And then you can see right here on Visa, on the first gap up, second gap up, same exact pattern, very similar pattern in this sense. Visa had a lot more to it. It was such a golden setup, but you could see the pattern, right? 1 gap up, second gap up, closes weak, looks very bearish. Next day it sells off hard, right? But this is the main pattern. It gaps up, second day it gaps up, it goes red on the second day, it gaps up, and then a massive sell-off once it cracks key support, right? So we're going to use what we did on Visa's daily chart with Facebook. Now, obviously, Visa was a much better setup and it had a lot more variables, but this is key, man. I just showed you that pattern. So Facebook has a gap up. Day 2, it gaps up, it goes red. This is a bearish candlestick. When you see a stock have an overreaction like this and it forms a bearish candlestick on the daily, it tends to sell off the next day. So you can swing trade it. Or what you can do is you can not swing trade it and you can wait for the first red day. You can wait for the first red day. So let's say all of these stocks, let's say they gap down tomorrow and they have a red day, right? What you want to do is in terms of, okay, it's having the red day. I want to get in. It's at that key level where I want to buy puts, where I want to short the stock. Excuse me. The best price to buy those puts and the best thing you can possibly do in terms of intraday micro trading is to do this, which is to wait for the morning rip. Now, it's not going to have the morning rip all the time, but when it does, you will get in at the best price. You will put yourself in the best position to succeed. So if these stocks gap down, like Visa and like Facebook will most likely do tomorrow, in my opinion, you want to wait for them to rip back up to the previous closing price, which is this blue line. Once it goes from red to green and fills this gap, you wait for it to go red again. And it forms lower highs, it forms bearish confirmations. Look for it to struggle, look for it to react as a resistance. Very simple candlesticks combined with these gap strategies and daily key levels and intraday key levels that I'm using, right, for the entries. And then you buy the puts when that occurs. That is the best thing you can do. The issue with buying put options when a stock has the first red day and it already gapped down is if you buy the puts at open when it already sold off, the problem is it can rip back up. It's not going to do it all the time, but it can rip back up to the previous closing price. And if it does rip back up to the previous closing price, you're going to get squeezed. You're going to be exposed to a lot of risk. And not all the time as well is it going to go back to red. Sometimes it would just keep going up. That's why the best thing you can do to limit your risk and make bigger profits is to trade these at the best setups and not only wait for the gap to fill, but wait for the bearish reaction, wait for it to go red again, form lower highs, form bearish candlesticks, and then buy the puts. So just understand, if you choose to buy puts on the first red day when it gaps down, and before you wait for this gap to fill above, your risk that you're exposed to is that gap in between, right? So the bigger the gap down, the more risk you are exposed to if you get in before the gap fills. So that's the best way to play it. Now, doing this, I want you to understand, if you do it the right way, you will miss out. You will miss out on opportunities. But what you're going to do is you're going to put yourself in the best position to succeed as a trader, which means you're getting the best entry, you're exposed to a lot less risk, and it's going to put you in a situation where you can win big because your entry is amazing and you're entering a situation like on Facebook where it can have a big move. If you're trading charts that can give you a big move, like I showed you on the daily chart how to determine that, right? These key levels with big moves, you are going to be exposed to big wins as long as you're getting in at the best entries. If you trade big moves and you don't get the best entry, you will be exposed to big losses. So do what's best for your portfolio and trade less and make more money and protect your capital and put yourself in the position for the best, put yourself in a position for the best way to succeed as a trader, right? Do what's best for your capital, for your portfolio. Do not worry about missing out on setups. All you need is one great trade a week and to compound that strategy. Figure out what works, figure out that one thing. For me, it's mainly been gap close reversals to fill the gap below in this bear market. And that's what works. And then you scale it, you compound it. And as you continue to trade that one thing, you narrow it down, you simplify it, you figure out how to get better at it. And what I figured out is it is best to wait for the previous closing price, and it's okay to miss out, right? Because if you choose to get in before that gap fills and buy puts, you're exposed to a big loss. And I don't want to be exposed to a big loss. So I would rather miss out on setups, trade less, and profit more and play it safe. So let me catch my breath here, guys. I'm still a little sick. So our next setup, that's Facebook, right? And in terms of, okay, well, what's the best price? Like I said, previous closing price, right? So $200.47, $200.47. If that reacts as a resistance level, watch the breakdown. And if you see $200.47 react as a resistance level and it's looking bearish, it goes red, it is going to sell off to about $193. That is our target. $193, $194 is going to be our micro target. You can see on this day when it turned 202 into resistance, it crashed all the way to 185. So we're not even being greedy, and that's a phenomenal target. So the micro target is going to be like 193 to 194. That's where I would look to take profits on Facebook. The best entry is $200.47. You see that $200 cracking, you're going to want to play resistance, play the puts, right? That is the number one setup that I'm seeing. Visa already did what Facebook should do. So that means it's going lower right now. In terms of Facebook, this is where we're at. In Facebook, we are right here, right? So if history repeats itself, if the pattern works, you're looking at a big red day. In terms of Visa, it already did what Facebook should do. So it's at a lower price, so it's less ideal. But I still think it's a decent opportunity. But what I'm telling you is Facebook is the better play. It's a more liquid option chain as well. It's at a better resistance level. And it's the better play because it's more overbought. It's more towards key resistance. I could show you a bunch of stocks that are at key breakdowns like the SPY. But I would rather be trading stocks at key resistance levels when the market is crashing instead of going with the key breakdowns. But with that being said, I still think Visa will be a decent play, and this is called a gap breakdown. What is a gap breakdown? And you can use what I'm going to show you on Facebook as well for another trading opportunity. A gap breakdown is when a stock gaps up and you take the low of day. So right here, Facebook had a gap up, and what was the low of day? The low of day was $213.05, right? So I'm going to show you an example of what I'm talking about. See right here how Visa gapped up and the low of day was $214. Once it cracks that low, the low of day was at $219. Once it cracks this low, there's no support. There's just a gap waiting to fill below. That's what we call a gap breakdown. So your profits are going to be this big margin of profit right here to fill this gap below, right? See the chart. Once it cracks this support level, there's just a gap straight to fill below. That's what we call a key gap breakdown. It's a special key breakdown of support where there is no support and it really starts to fill that gap below. We're obviously taking profits along the way. We're not trying to aim for the huge big win with full size to fill the gap below, but realistically, it can go back down there. And you could see once Facebook cracked this level right here, once Visa cracked that level right there, it started to go back down quickly to fill the gap below, right? So you can do that again. You can do that again on Visa, and you can do it with Facebook when Facebook cracks the low of its gap up, right? So the new support is at 213. If Visa cracks 213, it is going to start to get crushed. It's going to start to go back down to fill this gap below at 201.10 because there's no support, right? So look for the key breakdown on Visa. If you see 213 react as a resistance level, buy the puts. Will, what options are you buying when you're day trading? I am typically staying at the money. I'm choosing at the money or in the money strikes, and I'm going with the closest expiration typically when day trading. Swing trading is, with swing trading, I like to have a further expiration, more time than I anticipate to play it safe. But with day trading, that's what I'm doing. I play it extremely safe, right? So for Visa, look for the 213 key breakdown, buy the puts if it reacts as a resistance, ride this back down to fill the gap below at 201.10. That's a key breakdown setup. And you could do the same thing with Facebook. This is part 2 to the Facebook puts. Part 2 is once it goes under $192.90, it's going to have a sell-off to about 187. So you could buy puts twice on Facebook. I just gave you 2 phenomenal trading ideas. Visa is another phenomenal trading idea. Those are 3. So our next stock, and I like this one as well, because it's at all-time high key resistance level. That is something that you can't say about most stocks in the market right now. Most stocks in the market right now are, well under 52-week lows, getting absolutely crushed. But Coca-Cola is sitting at all-time high key resistance, right? And I've noticed when Coca-Cola forms these massive red days at major resistance, at all-time highs, it tends to break down. And this is what I like about the setup. You have this gap to fill below right here on Coca-Cola at $65. There was a gap to fill. And it's starting to turn that 65, break down, turn into resistance, and it's starting to trend down. So if Coca-Cola can crack this 64.60 and turn this into resistance tomorrow, the previous closing prices, you're going to want to play some puts and ride it back down to about $64, or to fill this gap below, this would be the bigger target at $63.81, right? So that's a decent setup. The best entry would be to wait for this gap to fill above at $69.19, but it does look like it wants to go lower before filling this gap. It does look like it wants to fill this gap first before filling this gap right here. Overall, the chart is beginning to look bearish on Coca-Cola. My favorite setup as of now is going to be Facebook and Visa. Those are my current favorites. JD, this is another one. JD had a massive gap up, right? And you could see there was a gap to fill above. Look, it's the same pattern as Visa, right here. JD gaps up. It fills this gap right here at 64, forms the bearish pin, reacts as a resistance level, excuse me, and it comes crashing back down to fill the gap below at 59.77, right? So it's a gap close reversal to fill the gap below. My favorite strategy, go back and watch the previous video. It'll teach you, it'll go more in depth, teach you the basics on the strategy within Trader Society. That's where you learn everything in terms of the trading strategies, psychology, mindset, trading, risk management, and position sizing, right? So anyways, in terms of JD stock, play for the gap to fill below. There's a gap to fill below at 57.81. It's on track to fill this week. Use the gap breakdown strategy. Once it cracks $61.56, once it cracks 61.56, it's going to sell off hard and start to fill the gap, right? So that's what you're going to want to do. Buy puts, play the key breakdown. For JD, same strategy as Visa. And you can visually see there was a gap to fill right here, like there was right here. Same thing with Visa. It filled the gap and it's starting to react as a resistance. It's starting to look bearish. You have a very bearish candlestick on the daily and it's on track to fill the gap below, and you have another gap to fill below. So the sky is the limit for puts, guys. JD puts, another great setup. Walmart is going to be tough. I don't like the way it trades. I don't like its price action, but it is at a key level. You got some resistance right here towards $152. You can see Walmart is trying to crack this key support at 153. If it cracks 153, it goes to 152. In terms of Walmart's overall trend direction, from a macro perspective, if it can crack 152 and turn into resistance, it's going to start to bleed and have a bloodbath within some macro time. So it could be a potential swing opportunity, but it is a fairly tough stock to trade in my opinion. But that is something I would keep an eye on. It's heading towards major previous resistance that could react as micro support at 152. But overall, once 152 gets taken out, it's gonna really start to fill a bloodbath. And in my opinion, within time, we are heading to 146 to fill this gap at 146. So this is on my macro midterm leap option put radar, as I value this at 146, I would say within the next 30 days. So that's Walmart. That's like a more swing trading idea I'm keeping an eye on. Tesla, not too interested in it, but people have requested me to review it. So in terms of Tesla, we're at this key make it or break it level, this 877 gap. If it cracks 877, it's gonna sell off to about 845. That's where it's heading. If it cracks 877 and reacts as a resistance, if it holds, then it pushes back to about $900 a share. In terms of how does the overall chart look, the overall chart looks bearish. You can see right here, major support at 975. It can't even go back there. It cracked right through, dropped all the way to 821, and it's been forming a lot of resistance lately in the 918 to 930 zone, and it's trying to break back down towards yesterday's 5-day low. So with that being said, 977 is make it or break it for Tesla. If it cracks below, it sells off hard. If it holds, it pops back to 900. That's the analysis on that. I'm not too interested in it, but you can consider a 977 breakdown. I'm just not too interested in it because I feel a lot more comfortable and confident and trading the gap close reversal to fill the gap below. The other strategies that I've mentioned, such as Facebook, the V gap key breakdown, Facebook and V, JD as well. Those seem to be my favorite setups as of now. In terms of other setups on my radar, Apple's getting very interesting and it's looking extremely bearish. In terms of Apple, we got a gap to fill below at $156.50. It's on track to fill the gap. Once it fills the gap, if it cracks, it's gonna sell off to about 154.60, which is a major key breakdown level. If that cracks, if it holds, it's gonna try to have a reversal. In terms of how does Apple look, it looks like, as everything looks like right now, that it wants to go lower within some time. So it's overall bearish. In terms of Snapchat is on my radar. So these are more key breakdown setups, not at key resistance levels. That's why I like Visa, Facebook, and JD the most, because they're at the key resistance, right? In terms of bear markets, I like focusing on key resistance rather than key breakdowns at heavy support. So in terms of, Snapchat is looking fairly bearish. We are turning this major gap fill level right here. You can see there was a gap to fill right here. Snapchat had a reversal, came back down. There was a gap to fill right here. It's having a reversal. It's breaking down. There's also a gap to fill right here. So in terms of Snapchat, we have a gap to fill below at $24.50. That's where I want to buy calls at $24.50. If it can have a reversal off that level, nice bounce bullish confirmation, I'll look to buy calls there. In terms of puts, it looks very bearish. It filled the gap at key support. It's having a reversal. So Snapchat's on track to break down and go lower. And in my opinion, as long as $28.80 can react as a resistance level, we are going to be on track for a very nice pullback to $26.80 to $27. So I'm very bearish on Snapchat. I mean, just look at this. Gap close reversal right here, comes back down and fills the gap below, and it turns the gap fill level into resistance. And you could see what happens right here. Gaps down, turns it into resistance, sells off hard. Watch for that history to repeat itself where it breaks down the 28.70 and it drops all the way to 26.70. You're looking at a 2-point drop on Snapchat. That is one of my more favorite key breakdown setups. So our next setup, this is going to be a day trading and a macro swing trading opportunity. So macro swing trades are passive income plays. These are money seeds. And what I'm gonna do is I'm gonna show you how you can play this MRK. If you go back on my channel, way back, you'll find a video where I made about MRK, and I told people to buy this stock in the low 70s at about $73. And I told him it was going to rocket back up to fill this gap at 82 and then potentially fill this gap at 91. History repeated itself. Long-term investors, mid-term investors were rewarded. And even in a bloody bearish market, it still filled those gaps. So with that being said, I'm bearish. I am extremely bearish. So look at this candle right here, right? Study this candle at key resistance. Now look at V. Right here, key resistance. What happens the next day? History repeats, big red day. So what I'm planning to do on Mark for the micro, in terms of macro, I think now's a good time to buy macro puts to play for the gap to fill below. You have a gap to fill below on 84.41. Over time, I see it dropping to 84.41, which is where you want to start locking in some profits. So I do believe macro puts are going to print. Now, which macro puts? Like I said, I would stay at the money. And in terms of expiration for macro, I would look into June. I would go with like a June 3rd, a June 10th, a June 17th. I would look into those and stay at the money. These are extremely cheap. And what I would do is I would get the 87.5 strike. I would get those, and I would go with a June 17th, right? That's a great passive income play in my opinion. Now, I do believe there is a micro trade here as well. So in terms of the micro trade, wait for the first red day. Once it has the first red day and it gaps down, what do? Wait for it to rocket back up to the previous closing price. And then when it goes from green to red, forms bearish candlesticks, forms lower highs, we buy the puts towards the previous closing price, ride it back down to fill the gap below. It is on track to have the first red day most likely tomorrow. The setup is, and this is the best setup, if you look at Mark, right? We go back to the 20-year chart. This is an absolute gift. What I'm showing you is the rarest setup you're going to come across in the stock market. This is why, for those of you who stay to the end of these videos, get rewarded. MRK is an all-time high gap close reversal to fill the gap below. That is the best setup you can trade for put options. So I'm loving it for the micro, and I'm loving it for the macro as well for puts. With that being said, you can visually see it went from 92 and then it had a massive pullback all the way to 65. You can visually see it went from 91.40, it had a massive pullback all the way to 71.80. And now you're starting to see the highest gap to fill above was right here at $90.54. Huge downside potential. It almost filled the gap. It got to a high of $90.01, and it looks like it's on track to have a partial gap close reversal because of this bearish wick. So when we get the first red day, we wait for it to go back to the previous closing price. So if tomorrow's the first red day, 88.69, right? Reacts as a resistance, goes red on the day, forms lower highs. We buy the put options like I showed you in my previous video how to trade this strategy. And then we play for the gap to fill below at $84.50. In terms of key levels to be locking in profits, 86.50 and 84.50, and also 85.50. Those are going to be our 3 profit taking zones for micro puts. This is an A1 setup. It's going to fall off a cliff once we can crack this 88.30 level. So like I said, wait for the first red day. Once it goes back to the previous closing price, wait for it to go red, buy the put options. You have to ask yourself, who is putting you in these situations? Who is putting you into these very lucrative trading opportunities, right? That have huge upside potential for these put options. Who's teaching you the put side? Who's teaching you the bearish side, right? Who's teaching you how to trade both ways? Like, these are the A1 setups, guys. It does not get better than this. These are setups where I'm taking very decent position sizes, right? I'm protecting my capital. I'm protecting my capital. I'm managing my risk, and I'm trying my best to maximize rewards heading into this week. These are the best setups. It's going to be a phenomenal trading week. And for those of you within Trader Society, you will get to watch me trade these live in real time at the live streams every single day at market open. So our next setup is going to be UAL, United Airlines. For this one, I'm mainly thinking macro puts. I'm thinking like a macro put, like I said, with market June 17th, 87.5 strike. This is like a macro put, plan a money seed, let some ride, right? And you do not want to go huge on macro puts, right? You don't want to take very massive positions on these, but these should do well as well. So with this one, I would look into, again, like a June 17th, and I would go with a $50 strike. See, the volume on these is crazy. Look at this, 17,000 on the 45 strike. I would seriously look into these. I think this is going to be a good passive income leap option play. So not only do we have day trading opportunities and short-term swing trades, but we also have midterm to leap option trades where we just kind of passively hold these and play for the gaps to fill below. So my midterm target by that June strike that I mentioned is going to be $44 to $46.70. The puts should do fairly well. In terms of what am I seeing in this for a potential put opportunity, right here it gapped up, it formed the bearish candlestick on the daily, it sold off hard. You have a lot of proven major resistance at this nice key hole round $50 number, and I don't really see this stock going anywhere for the overall micro to macro direction. It looks like it wants to come back down to fill this gap below within time at $46.51, even potentially $44, and there's so many gaps to fill below. It was just at 52-week lows with an overreaction from 30.50 to 50. Like, give me a break within this type of market. Like, I'm overall bearish. I'm not buying it. I think a lot of these big earnings plays that had gap ups, I think they're going to be coming back down to fill their gaps below within time with the type of market where you're currently in. So, I mean, you also have to keep in mind, there was a lot of stocks that, SPY had its biggest red day this year. It was down almost 4%, like 3.70% on the day or something like that. And it's got more macro downside potential, right? It could have a little micro reversal, but it's got a lot more macro downside potential for the year, in my opinion. And a lot of these stocks actually didn't have a massive move down, like NEO, AMC, UAL. A lot of them didn't have a very massive pullback. So that's another thing to keep in mind. They're due for more of a drop, especially the ones at key resistance like UAL, like MRK that we went over. So for this one, basically, once we crack this $50 level. We're on track for a quick micro sell-off to 48. From a macro point of view, we're headed to $46 in my opinion. For this one, I'm mainly just interested in a macro put, not really interested in day trading this one. I think we'll have some better day trading opportunities like I had mentioned earlier in this video. Bili and Zyme, these are going to be the last two, my least favorites. These are, again, going to be passive midterm swing trade put opportunities. The spreads can be a little wide and the volume is going to be light. So if you do take those, go very small in these. But in terms of Bili, Bili is looking very bearish. Very similar chart to JD. It filled this gap right here. And as you could see, once it filled the gap from 26.24, the high was 26.28. So it filled the gap right here. You could have used the gap close reversal strategy, and it's coming back down to fill the gap below at 22.17. So in terms of put options, I would go with the $24 strike, and you could see people are playing these. And for this one, it's not going to be a macro play. This one is going to be, let me just double check the chart to see if it can be a more longer term play. Yes, so this one, we're going to keep it safe. I think it could go lower. I think you can do well as well with a more macro, like a June 17th as well. Let's just double check the chart here real quick. So, yeah, that could do well as well. But with this one, I think you could play a short-term one. I think you could do like a 24 strike. The spread isn't too wide. You got some volume coming in. So keep an eye on that $24 put strike that expires on May 6th. The key for this one is it needs to crack $24. When it cracks 24, we're looking at a gap fill to 22.17 within 2 days from the crack of 24. That is a gap close reversal to fill the gap below strategy. Very bearish on that one. Zyme is our next one. You could see right here, major resistance, massive micro sell-off, major resistance. It's coming back down to fill the gap below at $5. For this one, I would consider, and again, this is something I would go light on. I would consider, and you're going to have to go, this is why I dislike this one. This one's going to be my least favorite. It's because you have to go out of the money. So if you do trade this one, go super light. It's not that great of a setup. I mean, I really don't like it because it's out of the money. So I really don't even recommend it. But the $5 put strike, those can go up to about 45 to 50 cents if it fills the gap this week from $5. So keep an eye on those as well. So those are going to be the best setups at the best prices. If you want to watch me trade live every single day at market open, and if you also want access to the chat room, to the members within the chat room where you can add us as a friend on Discord, contact us one-on-one directly. During the live trading streams, you get to watch me trade live at market open. You get to see my open positions on my portfolio, hear the live trading commentary. You get to see me use these trading plans live in action, which is step 2 of the trading process. Then step 3 is to recap the trade, document the trade, learn from your mistakes, and then document everything right, and then rinse and repeat, right? So plan, trade the best setups at the best prices, and then document, right? If you want access to the chat room, to the live trading streams every single day at market open, to the video lesson library, where you learn how to trade the best setups at the best prices, where you learn all the gap trading methods, all the gap trading strategies that I've learned throughout the past decade. And then you also get access to the mindset trading, the psychology, the risk management, the position sizing, and there's so much more to it. Within the chat room, you get access to my real-time trade alerts, where you also get to watch me trade live on stream and learn in real time. And there's a lot more to it. We have our lead analyst who's mastered the SPY. He trades it both ways, very micro-focused. He is starting a 1K to 100K challenge very, very soon. So not only are you going to get access to me, but also moderators within the chat room who've mastered strategies as well. So there's a lot more to it. All of the information is explained on the first link in the description. You click that first link, watch the video, read the entire page. If you feel like it's the right program for you, you'll know once you're done reading the page. Sign up for the program. You get instant access where you can join immediately, right? You get the daily stock analysis within the chat room as well, the watch list, the written watch list, the daily updates. I'll answer your questions. I'll help guide you through the trades, right? You get instant lifetime access for a limited time only, right? So it's instant access, it's a one-time fee, and it's lifetime only. I am going to tell you sooner than later we are going to raise the price. This is going to cost over $1,000 later this year, most likely sooner than later. And it will happen, because I'm telling you guys, this program, this is easily worth 10 times the cost of what I'm charging for it in terms of the results that not only I've gotten, but what members have gotten as well. This will be a much higher ticket and even more higher quality group within the near future. But for a limited time only, you can get in and stay locked in and be grandfathered in at the lowest it is ever going to be priced at, right? So for those of you who invest into Trader Society earlier, will get rewarded with, starting your education as soon as possible and getting in at the lowest price. So I do want to make that very, very clear. So it's going to be the first link down below in the description. Now we're going to be going over the SPY. So if you do join, you can get trading access, as soon as you join, starting tomorrow morning, right? At market open, you can join the chat immediately. Everything is instant access. So, I had a lot of people ask me questions about that. So I just wanted to clarify that as well. And then in terms of our last analysis, it is going to be the SPY. So in terms of the SPY, we are at a crazy key level. I want to bring a lot of awareness to this. A lot of people are also comparing this to 2008 crash. It looks I'm extremely macro bearish. We're obviously due for some sort of micro short-term reversal. So this is what I want to bring awareness to. And this is really going to set the tone from Monday to the middle of the week before the Fed speaks. This is really going to set the tone for the SPY. This is what I want to bring awareness to. I want to bring awareness to February 25th, right? This is where SPY gapped down, and as soon as it gapped down, it came ripping back up, right? That's what I want to bring awareness to. And if we look at futures, let's take a look right here. Just give me 1 second. So you can see right now, SPY is sitting at 412.90, right? It's having a little drop, right? So this is what I want to bring awareness to. I want you to think of this level heading into this week. This is going to set the tone. $410.64. That's going to be the bottom of this level I want you to think about. And $412. That is going to be the top of this level that I want you to think about. So I want you to think of this as a zone. I want you to think of this as a square box. This is going to be the zone that is going to help you determine where the big move is going to occur for the SPY. This is what I'm going to bring awareness to. Right here, the SPY gapped down and it bottomed at market open and it ripped back up and it had a very nice 2-day rally. Then it was a fake pump and it came back crashing down, right? Great opportunity for a macro put at resistance. But the point I'm making is $410.64 is going to be the bottom of this zone. This is a crazy key level. The market is extremely volatile, and this is a key big move level, right? This is a very massive key big move level. If we are due for more of a macro crash, is it going to happen right now? How do you determine that? If 412, the high of this zone, 412, reacts as a resistance level, that crash is coming now. If 412 reacts as a resistance level, all we got to do is crack 410.64, break that down, react as a resistance. SPY sells off very hard. Instead of having this big upside move, it has a big downside move, right? So I want you to think of this zone. This is your resistance, $412, the previous closing price. This is your support, $410.64. If you see it struggling and reacting as a resistance in the middle or at the top of this zone, and if it can crack and turn 410.64 into resistance, SPY is going to sell off hard for the micro. It is going to get hit. It's going to get hit very, very badly, right? It's a key level with big upside. If it cracks and reacts as a resistance, then instead of being a key level with big upside, it's a key level with big downside, right? Now let's talk the bullish micro sentiment. The bullish micro sentiment is if the SPY starts pushing above this 412 to 413 level, breaking out, turning it into support, you're going to see a massive micro reversal for the overall week. It's going to be a nice pump, man. It's going to be a nice pump into the 420s. You got a gap to fill 427.81, the best price for put options this week. And this is going to be a money printing level, right? So if the other equation happens where SPY breaks above 412 and it starts running and it has this massive 2-day rally and then it reacts as a resistance, sells off very hard. When is that sell-off going to occur? right here. $427.81. This is going to be the best price level for put options on the SPY. You can see there was a gap to fill above at 428.51. If you watch my previous videos, I told you guys the best price to buy puts on the SPY was at 428.51. It filled the gap, had a reversal, sold off very hard to $411. So if the bulls take control and break above 412 and turn it into support level and they start breaking out, the best level you're going to want to wait for, and this could be a swing trade, not only a day trade if it forms a bearish candlestick on the daily, is going to be 427.81. So that's the zone. If it reacts bullish, we're on track for a gap fill 427.81 within the time this week. If it reacts bearish, how low can the SPY go? If 410 cracks, how low can we realistically go? We are going to be on track for a move to $405, right? So pay attention to the zone. See who's taking control. See who's reacting bullish, right? If SPY pumps to 412, say it gaps down, it pumps to 412. I mean, you can visually see it closed at 412. Right now it's at 412.61, right? So just pay attention to the zone. If the zone reacts bearish, buy the micro puts. Get in, get out quickly though. If the zone reacts bullish, then what you can do is, if you don't want to buy calls in this terrible market, not this terrible market, the market's amazing for put options in this bearish market that we're in, then just wait for it to rip back up to 427.81 if it's reacting bullish and starting to break out at 412, right? If you buy puts and it breaks above 412, cut the loss small, wait for 427.81, make it all back and more. That is the game plan heading into this week. I am mainly put focused, waiting for the put opportunities. Why? Because yeah, you can make a quick in and out trade, a quick buck on some calls, but the overall sentiment is macro bearish. And one thing that I would avoid, even if you're micro trading, I would try your best to avoid betting against the macro, because when the macro hits, it hits hard. And that's exactly what happened on Friday. So if the macro trend is bearish, even if there's micro bullish opportunities, I'm going to try my best to just stay mainly focused on macro trades. Even when I'm micro trading, stay focused on the macro sentiment, even if I'm micro trading, right? That way when macro hits, it's really in my favor and I don't get hurt. So yeah, I'm put focused. So that's my game plan heading into this week. I am telling you guys, this week, with the volatility we have, with the trading opportunities that I shared with you, this is going to be a phenomenal green week. This is expected to be an amazing green week. I will be sizing effectively. I will be trying my best to manage my risk. I will be trying my best to enter the best trades at the best prices. I'm telling you, once you have a big win and you understand how you actually won big and it wasn't luck, like my trade on Visa, that wasn't luck. That was pure skill. I could do that, rinse and repeat. Once you have that, your mind's going to shift. You're going to be like, I have to do this. I have to just trade big moves at key levels, gap close reversal to fill the gap below, right? Ever since I traded out on Visa, my mind is shifting right now. It just wants to trade those. It just wants to trade the best setups at the best prices. I don't want to be in a trade where I know it's not 100% the best setup, where I know I'm going to be struggling during the trade. I don't like the price action. I don't like the level. I don't like that it doesn't have the opportunity for a big win. It's just a scalping setup because it's not that key level, right? Once you understand what those look like and how to find them, I'm telling you, all you're going to want to do is trade those. You're going to shift from quality over to quantity, and that's the shift that I'm making. I don't care if the market doesn't give me the best setup at the best price every single day, and it's not going to. I just care about putting myself in the best position to succeed as a trader, and that's what I'm going to try my best to do for you guys as well, right? So we can all succeed and grow our accounts together. So moving forward, I'm going to try my best to have that high quality over quantity approach. I'm telling you, your mind's going to shift once you win big with skill and you see that it's possible. You're just going to want to trade those. So that's my plan moving forward, to trade the best setups at the best prices, to really raise the bar with my trades and to have the trades speak for themselves, move in silence, and just trade those, which is typically going to be a couple trades every single week. I would say like 2 to 3 trades every single week. And you have to have that awareness if the trade's not there or not. If it's not there, it's not there. So with that being said, if you do want to join Trader Society, it is going to be the first link down below in the description. I will see you guys within the chat room, and I will see you tomorrow live at Market Open. I'm going to be sending out the updated written watch list in the morning with the new stocks that are going to pop up on the scanner with the new price alerts and the new updates on our current stocks, right? And then tomorrow you'll be able to watch me trade live, and I'll also be sending out the real-time trade alerts within chat and helping and answering your questions on the live feed, on the live stream, and within the chat. I will see you guys tomorrow. Thank you so much for choosing to invest your time into your education. Make sure to subscribe to the channel and like this video. I'm telling you guys, this video, phenomenal video lesson. They just keep getting better. And last video was absolutely amazing as well. But this one is an absolute banner. I'm telling you, the trading setups, I can feel it. I can see it. I know it. These are going to be phenomenal A1 setups. And I'm looking forward to trading these and seeing how they play out, right? I'm telling you, the best way to learn as a trader is through your own mistakes, through your own trading experience, through your self-education. You're going to learn so much through those lessons, through those mistakes. That's how you grow. I will see you guys within the live trading stream tomorrow. In terms of right now, I'm going to be in the chat room right now answering some questions.